Do institutions really want to get on chain, or are they being dragged into it?
Wall Street loves one thing, and it's financial engineering. And the only real reason to use a blockchain over a database is security. The institutional layer care about the decentralization security way more than the consumer layer.
Vivek Raman spent 15 years trading bonds at Morgan Stanley and UBS, then co-founded Etherealize, which aims to bring Wall Street onto Ethereum by fixing blockers around regulation and privacy. One of the things that was always seen as foundation of being on-chain and a whole primitive in terms of DeFi design, which was transparency, is in the more recent past is being seen to be a liability.
The only way to do privacy correctly is to have programmable, expressive privacy on public blockchains. Once you start having 15 different chains, I think we've broken the financial system. I don't believe in a multi-chain future. I believe in a multi-rollup future.
Is this whole Americanization of crypto really a good thing? Vivek, do institutions really want to get on chain, or are they being dragged into it?
I think it's a very good first kickoff question. And I can say very resoundingly, they want to and they need to, and they understand that if they don't actually start implementing this unbelievable technology, which has been around for 10 years, there's a risk of being left behind from a very, very big technological upgrade. And I think that sounds like you've also explored institutional adoption for many years. I have as well. There was a regulatory overhang. There was a lack of maturity of the technology. There was a lack of any real will across the institutional world to actually push it. All of it's changed now. So I think resoundingly, yes, now is finally the time. And so we're supposed to accelerate, and we're supposed to actually push for responsible adoption as quickly as possible. It's a really golden window of opportunity now.
Right. And can you sort of break it down into some of the key components of why institutions would want to get on chain? Of course, very obvious things like cross-border payments and stuff is pretty clear, even though it's at the expense of institutions making tons of money when they shouldn't. There really is no need for any intermediary to be making that kind of money on basic cross-border payments. But tokenization, for example, is there a real need for tokenization, and why? Is it more from a back-end settlement perspective, or is it also more front-end in terms of how users or investors will interact with even TradFi financial assets?
The reason I came into the blockchain space, I left Wall Street. So I was at the quote unquote institutions for 11 years, and a cross section: Morgan Stanley, UBS, Deutsche Bank, Nomura, in the engine rooms, trading and doing operations and settlement and the whole nine yards. So I have a pretty good snapshot for how trading floors work and how assets move. To me, I was drawn to Ethereum not because it's some like ideological movement, because it is the all-encompassing technology that can upgrade every single part of the financial system. So to answer your question, it's all of the above. So let's come back to cross-border payments. It makes zero sense that currencies are not digitized. It just doesn't make any sense. I mean, we're in the internet era. Information is digitized, and the internet has changed the information flow. The same thing should have happened with finance a long time ago. And the moment's now. And a big blocker was regulatory, and another big blocker was technological readiness. And both of those are now tailwinds at the exact same time. So let's take cross-border payments. I always say that blockchains are not a zero-sum game. So institutions can still make plenty of money. In fact, they can actually probably make more money because their costs of operating go down, and still charge margins on top of smart contracts. Ideally, I mean, money movement should be free. So, I mean, the cost of sending a stablecoin is free, but you can still build in safeguards. You can build in fees. It doesn't actually detract from the banking system. I think it's very important to say it actually augments the banking system. If you come down to the interesting part, I think stablecoins are table stakes. But once you start getting other assets tokenized, stablecoins are just tokenized dollars and other currencies. When you start getting other assets tokenized, if done correctly, you actually upgrade both the front office and back office at the same time, and you make the financial system better. And that's what really drew me in. It's the fact that programmability on assets and digitization of assets is such a huge unlock that there's just no reason not to do it. And I would go around for the last 4 years and say, why aren't you guys doing this? It's so much better. And institutions, banks, asset managers were like, yeah, it is better, but we're not allowed to. We're not ready. It's too risky. But everyone knows it's better. And now is a moment where they can actually act on that. And that's why I'm excited about this exact moment.
Mm-hmm. I guess you just recently raised your 40 million Series A for Etherealize. Congratulations on that. Um, uh, Talk to me a little bit about Etherealize. What was the sort of mission or the whole, the motivation of founding Etherealize, and how has it moved? I think when I first came across Etherealize, it was about sort of really being the helping the whole ecosystem from a marketing perspective, establishing, almost like, what's been a critique of the whole Ethereum ecosystem, that there's very little support for applications, apps, and builders on that front, which I, as a founder, also have faced.
Yeah.
So I saw it at that point in time, and now you've kind of moved on from there to really bringing Wall Street onto Ethereum. So was that always the plan? And tell us about Etherealize at a deeper level.
Yeah, first off, we will never stop marketing the Ethereum ecosystem. We'll never stop marketing ETH, the asset. We'll never stop just amplifying the ecosystem. That's one of our core roles, and it's very, very complementary to bringing the next wave of institutions and assets and players on chain. So again, most companies end up being either just product companies and they don't end up amplifying an ecosystem, or they end up being evangelists and don't actually build anything. And we have chosen very, very deliberately to do both. It was path dependent though. So I mean, the genesis of Etherealize was I've been independently doing in my last jobs at banks and asset managers and everything. I've been working on Ethereum institution adoption for a while. So I mean, during the bear market when you weren't allowed to do anything. I mean, I was educating, I wrote hundreds of pieces about ETH and L2s and the architecture and translated it into institutional language. And to me, the story just kept getting better and better, even though we were in a bear market. And then finally in 2024, the ETH ETFs got approved. Larry Fink finally started becoming the champion for tokenization. And when he says that the world's going to be tokenized, people listen. Like that's the thing. I mean, he's the top of the top in the financial sector, and he said that this is the next wave. So that de-risked Ethereum a lot. And so I said, okay, this is the moment to actually go build something that's going to bring institutional players onto Ethereum. And the problem was through 2024, ETH ETFs launched, Ethereum became classified as a commodity, and no one really did anything. And not only that, but other layer ones, which I think have bad trade-offs that are not going to be good enough to onboard the entire financial system globally. They started becoming very, very vocal, and Ethereum didn't. And so it's Ethereum's curse is also its blessing, which is it's decentralized. It doesn't have any central BD function, doesn't have any central marketing function. The Ethereum Foundation is this wonderful organization that's done the most cutting edge R&D, pushing the whole space forward. But no one was doing the commercial part or the institutional marketing part. So we stepped in. Me and a group of Ethereum OGs, we got a small grant from Vitalik and the EF. We started running around for probably 6 months, validating that people actually wanted to use Ethereum. I think one very important thing is blockchains have a long time been a solution looking for a problem. So I want to make sure that there are actually real problems to solve. There's actually real unlocks and not just some like Rube Goldberg's machine we're building. And so after 6 months of talking to banks and institutions, when we had regulatory tailwinds, it became very, very clear that people want to build on public blockchains. Ethereum is the leading public blockchain. It's the first default choice for everyone, but we need to be aggressive about helping banks, asset managers, institutions actually on board, because it's one thing to say they want to do something and tokenize something. It's another thing to actually do it. So that's where the engineering arm came from. So we have to build products as part of our marketing and evangelism and business development. And so we have, I think, the best engineers in the world here in Austin. I think we have the best Wall Street players in the world. And we're going to do our best for responsible adoption, because I do think the world has to belong on Ethereum. I don't believe in a multi-chain future. I believe in a multi-rollup future. And that's how this whole technology works, and you see the magic of it. So that's our mission.
Okay, so you refer to others in the ecosystem who are much louder, but not really perhaps built in design to on chain to bring on chain trillions of dollars of TradFi assets. We were talking about Solana here pretty much. So, and you're very clear also about your opinion that it's not going to be a multi-chain world. So how would you? I know your company has the name Ethereum already embedded into it, but at the same time, I'd still like to ask you, Vivek, like where do you see in this future? Of course, it's not going to be a singular chain future. There may be few general purpose chains, for example. Even in a future like that, how do you see where Solana and Ethereum will be?
Well, I think that first of all, there are others. I mean, there's Ethereum, and I think there's sort of everything else. There's also Avalanche, there's also Ripple, there's also Canton, there's also Monad's going to be launching, there's also Tempo, there's also Arc, there's also, so I mean, it's
ever expanding.
Yeah, it's ever expanding, and that's who Solana and the like are all competing with. The other faction they're competing with is the growing amount of L2s, which are actually anchored on Ethereum security, which L2s are, I mean, mathematically in their full form, they're better than having an L1 in every single sense. If you just think about the operating business, you don't need to operate consensus, so a giant cost goes away. You can be incredibly faster because you just focus on execution. We're starting to see that really play out, like lighter application specific L2 is doing TPS much faster than any other L to L1. So, and it's achieving that sustainably. So we're seeing this thesis. I'm only tribal by necessity because other ecosystems are tribal, but it's from a technology perspective that this whole thing works if all assets are tokenized in one ecosystem. I'm not saying one chain, but one ecosystem. And that ecosystem is Ethereum plus all the different L2s. It's much easier to do interop. It's much easier to do shared security. It's much easier to have composability when you're all on the L1 and L2 model. Once you start having 15 different chains with 15 different RWAs, I think we've broken the financial system. So I feel very, very strongly that it is Ethereum and then it's everything else. And yeah, everything else will continue to fight in a race to the bottom, and they can have a lot of things. They can have meme trading. They can have some I don't know, smaller, lower valued use cases. I think high value finance and high value institutions need to be on the safest, most secure, most decentralized, most global, most established platform, not on some like cutting edge quote unquote data center platform that's cut corners, because that creates security risks in later on down the road. And the internet doesn't go down, Ethereum doesn't go down, and that's the most important thing for money and high value assets.
Yeah, I mean, it's difficult to argue against that. One of the things that was always seen as a foundation of being on chain and a whole a primitive in terms of DeFi design, which was transparency, is in the more recent past is being seen to be a liability. And everybody's talking about privacy now, and this is essentially something which has come forth from the institutional side, and blockchains were not designed for that in the first place. Even though, of course, there's a whole surge of Zcash for now, and even we've got spokespeople talking about that even Satoshi wrote about the fact that if he could have made embedded privacy, he would have done that. So all that stuff is happening, but we're also seeing we're in the first week of November, and the last few days, the last week, we've seen an implosion happening in DeFi, primarily because of this whole so-called CDFI structure and certain things not being visible in the first place, and they were all under the sort of framework of DeFi, but not really DeFi, which is pretty absurd. So, so yes, there is a necessity for privacy in many ways, but at the same time, it's to me, it's in conflict with the whole ethos, principle, and sort of technical design of blockchain and DeFi. Uh, but what would be your view on that front?
So I think one major reason we haven't seen real sustainable public blockchain adoption over the last 10 years, because blockchains aren't new. That's the one thing is when you go into a big bank, every single one has deployed some sort of Ethereum fork. Everyone has like experimented. They're not stupid. They when they smell money and opportunity, they're gonna try and use it. The problem is they couldn't use public blockchains because in the name everything was public, and that's just such a non-starter. So it's not only the regulatory overhang that is now clearing, but it's also the fact that there wasn't robust, sophisticated privacy technology, and that's another reason why the stars are all aligned because all of that is ready now, and that's a byproduct of specifically in the Ethereum ecosystem billions of dollars going into ZK research. The only way to do privacy, in our view, correctly is to have programmable expressive privacy on public blockchains. Otherwise,
Mhm.
other chains are fully private, and then that's the financial sector all over again. So you may as well just like stick with the
Yeah.
existing infrastructure. Others do shortcuts for privacy and actually end up being very, very centralized and have databases with off-chain data. And then again, you've recreated the financial sector. ZK allows for parts of transactions, parts of assets, partial privacy, partial public, really programmable privacy. That is fascinating. That's uh ZK proving is not fast enough. It's becoming all consumer grade. All of this is happening at the same time. So this is why I just think that it's one of those adoption moments where everything is hitting at the same time. And so when we can go into institutions and say, you need privacy, we can give you privacy on public blockchains. And that's not only resonating very, very well, but that's the only way we see actual, real high value adoption. And so we're building a lot of those tools. So you asked, I mean, we educate, we market, we will always do that for Ethereum. I feel very deeply about Ethereum, if you couldn't tell. And I also feel very deeply about ETH, the asset. But we also have to create the tools. And one tool that has just not been created yet is programmable privacy using cutting edge ZK. And Lighter has actually done a really good job with that. Actually, I mean, they're now getting into the cutting edge, but we're doing a lot of that too. And it's not only is it inspiring because ZK is a talent magnet, but it lets us solve real problems. So long-winded answer to your question is privacy is here, privacy is ready, privacy is programmable, and we need to add it at the application layer as well as optional at the blockchain layer, which a lot of others have done.
Great. Okay. So we've got sort of how this the whole thesis of getting Wall Street on chain. So we've got if I were to rephrase what you said, so there's liquidity, fragmentation, and composability being two major reasons as to why it should all be on one ecosystem. And of course, we've seen cross-chain infrastructure is still not robust, and probably we don't know when it will be. It introduces too many other vectors, and this,
Yeah, exactly.
so right. And once we fix privacy, but without sort of introducing opacity, then we've got the entire ecosystem ready for institutional adoption. Is that how we should look at it?
I think that's spot on. But I think the ultimate thing it comes down to, underpinning all of that. So yes, all of that liquidity, composability, the fact that you're in one ecosystem, the fact that we're having privacy solutions, and all of that is underpinned. The only real reason to use a blockchain over a database is security. And so security is synonymous with decentralization. That's how I think about security. You need a system that nobody owns, that you can't point to single points of failure, and that has never had downtime, that prioritizes security over everything else. And that's where Ethereum wins just by a mile. Bitcoin's also very, very secure, but Bitcoin doesn't have a smart contract layer. So I think the real expressions of blockchain are Bitcoin for the asset, for digital gold, Ethereum for another really interesting asset, a productive store of value, but also for the smart contract layer that prioritizes security over everything else. And that's the game theory is when you come to the institutional layer, they care about the decentralization security way more than the consumer layer, because institutions don't want to use other people's platforms because other people's platforms means other people make money. So the only way to get everyone into one place is to have a neutral layer, a global layer. Just like institutions don't build their own intranets anymore because no one else will use them. They're not going to build their own blockchains anymore because no one else will use them. The only way this works is for Ethereum to be like the internet, but for financial assets. And I think people get that now. So I mean, I think it's time to accelerate on that thesis and to really yeah, be aggressive about it. But the architecture is all here.
Right. So one of the other uh, very fundamental reasons for tokenization is access. So once you tokenize, it's just open access, and for the first time, I'd say we have fractionalization at scale, the ability to have that. So I think these are so access because of these two reasons. How do you deal with regulatory issues? We can solve access technologically through tokenization,
Yep.
but then how do you kind of really provide access to a Wall Street asset to somebody sitting in another jurisdiction where there are capital controls or certain regulatory frameworks? So where are we headed?
I think we're headed to max innovation. I mean, this is where Wall Street loves one thing, and it's financial engineering. And I studied engineering in college, and I was like, the type of engineering I'm gonna make my future is financial engineering because it's really interesting. But that's how 2008 all the rise and fall happened is bad financial engineering because people got very creative without any sort of checks and controls. Ironically, blockchains would have actually solved a lot of that because you have records and immutability and inability to do under collateralized lending, etc. But coming back to it, by bringing new yield sources, by bringing new assets, by bringing tokenized versions of the entire world across real estate, fixed income, equities, everyone's working on commodities. By doing that, by bringing that on chain, the innovation potential of being able to package those up and take slices of the economic value. You can take slices of yield, you can take slices of the upside, put it in a token form, and then transport that through different geographies. Obviously, it has to be done with regulatory compliance, but as I've seen, regulators are open to it. They want more access. Like more access is not a bad thing. That's actually just more resilience across the board. Like, what's the point of creating all these complex instruments if people don't have access to them in their everyday savings accounts? We're seeing stablecoins are now in law, and stablecoins are accessible everywhere. You can teleport a dollar across the world pretty easily across different geographies, across different jurisdictions. We're going to see the same start to happen with tokenized assets. Obviously, there'll be more controls, and I think we should always respect the regulations and follow the controls. But the fact that people are open to it and saying that, okay, maybe in a tokenized stock, you won't have the actual underlying ownership, but you'll have the upside. And so you can tokenize the upside, but not the ownership. And that's one way. I mean, that's a lot of stock tokenization is happening that way. And then you can take that economic ownership across different geographies. And in some worlds, that's fine. Some people just want the upside to OpenAI or the upside to Tesla stock, but they don't need to do governance control. They don't actually care about owning the asset. All of these permutations are possible once you tokenize an asset. So once we have the tool set of tokenization and give that to the banks, give that to fintechs, and also give that to consumers, innovation is just going to absolutely take off. And we're going to see some things won't work. A lot of things will work. We'll have regulatory frameworks also built in parallel. The SEC is as open as it's ever been. Congress is as open as it's ever been. The administration is as open as it's ever been. So again, if it's not now, it's never. But I'm quite constructive that we will see responsible tokenization with real value that leverages the distributions that blockchains give.
Mhm. So yes, of course, a lot of this is driven by the US being the financial capital of the world, the dollar being the reserve currency across, and there's so much concentration of now crypto capital, crypto innovation, or rather crypto funding happening in the US, is for something which was supposed to be an open technology. Is this whole Americanization of crypto really a good thing, including stables and the way dollarization is being now very, almost explicitly being used by stables?
I put my positive sum lens on this is it's not either or. I mean, the US is the most robust capital markets. It is the backbone of the global financial economy. With or without stablecoins, the dollar is dominant. People in emerging market countries want to store their value in dollars. They just haven't been able to access them. Now they have access, which is I think a net good thing. But I don't think it's either or. So the US coming on board and using blockchain infrastructure, using Ethereum infrastructure in a big way is necessary for real global adoption that's sustainable, but it's not sufficient. I mean, ultimately, all of these same tools, they're software tools. They're not, at the end of the day, blockchains allow for programmability for assets and money. So we're creating software. Software is global. Software goes beyond borders. So all of these same innovations, you can create a bank in another country that's powered on Ethereum that has all the same smart contract functionality and the same asset tokenization functionality that a big US bank would have. So I actually do think Ethereum democratizes the financial system tremendously. The U.S. focus is nice because the U.S. has been very hostile to blockchains for the last 4 years, maybe even longer. So it's a breath of fresh air. I didn't want to build a company outside of the U.S. It just didn't feel right. Everyone last bear market left and went to all these different places. And to me, New York is the home of the financial sector, but it's not the only place. Like I want to take Etherealize's mission globally after. I just think the U.S. is a very opportune place with a lot of institutional players. So let's focus there for now, and then very quickly copy paste that same playbook across Europe and Asia and South America and everywhere else.
Right, and you're of course based in New York, and that's where Etherealize is also based out of. I mean, we were just having a chat prior to starting our own hash, and you said you're in Austin. How is the Etherealize team spread across? What's the structure like?
It's spread in sort of the dream structure of how we'd have of how the U.S. works. The financial hub is New York. The banks and asset managers all have headquarters rooted in New York. I'm in New York, and our BD and product team that is very front facing that goes around the banks and asset managers every single day. We're based in New York. We have an unbelievable engineering hub in Austin, led by Zach Oberon, our CTO. It's a dream to work with him. I think he's the best engineer in the entire space, and both on the ZK front and on the smart contract front. So we have a big office in Austin with just deep engineering talent where everyone just builds the most cutting edge products. And it's I'm here to just plug in for a little bit and see all the things that are going on because it's very, very inspiring. We also have a hub in Boulder. Danny Ryan, who was previously the Ethereum Foundation, another person who's a dream to be co-founder with. He lives in Boulder, so we have some talent there. And we have a pretty good SF hub as well. Grant Hummer, and then our marketing operations, everything is based there. So we're covering all the major tech and Wall Street hubs, and it's pretty awesome. It's pretty inspiring. But yeah, BD and product is in New York, as has always been in New York across Wall Street, engineering in Austin, and then a lot of miscellaneous functions in SF. That's how we are currently set up. We'll probably grow all of those as we get more and more adoption.
All right. Yeah, I mean the crypto ecosystem has just become phenomenal in New York. I guess it was always there, a bit under the surface in many ways, but since the last year and a half, it's just blown up phenomenally. And talking about New York today, we can't not talk about Mamdani and what do you think is going to is there going to be any impact, positive, negative, or generally sort of encouraging for the whole crypto ecosystem with the change of guard in New York?
It's very ironic because Mamdani's young. He doesn't have a lot of experience, but he projects a lot of hope and a lot of change. And clearly, the fact that it was I mean, such a dominant win shows that people want some sort of change. Like there is some unlock that people need to feel the American dream again. And I also think that politics always starts very extreme and everyone just ends up in the center because no one can get anything done until you come to the center. So I don't think it's going to be as bad as the people that are very alarmed say. I don't think it's going to be as good as people say either. I think it'll just be a
Yeah.
good energetic change. That being said, I got this really inspiring opportunity earlier this year to testify in front of Congress about the Clarity Act. And when I sat there and just talked about Ethereum and decentralized infrastructure and tokenization and how it's a positive something in the US and how I'm grateful that that Genius Act passed and it's all being happening in the US and I want to build in the US. When I look, there's two sides of the aisle, Republicans and Democrats. They want the same thing. Like that's the thing. They know this is an unbelievable technology. At the edges, there's some edge cases that they're fighting over, but everyone wants responsible adoption. I mean, no one doesn't want the internet and no one doesn't want responsible blockchain innovation. The keyword is responsible. I think Ethereum is the one blockchain that can deliver real responsible innovation, which is why I'll always hammer on that. But come back to Mamdani, like whether someone is more socialist leaning or more very free market capitalist leaning, blockchains enable all of that. I mean, blockchains are actually the most egalitarian thing ever. If
Yeah.
to your earlier point, you can take complex Wall Street instruments and then have distribution to everyday people. I can't think of a more democratic technology than that. So, no, he's young. Young people accept technology and change. I think we're actually going to continue to see a blockchain renaissance. And I think he'll be very supportive of it.
Yeah, absolutely. Blockchains, crypto are a whole democratization tool, and
Literally, yeah.
even for governance, Mamdani could probably usher in transparency into governance by using blockchain in other forms in the entire bureaucratic decision making setup as well.
I mean, absolutely. Like, there's all these use cases that make so much sense. Voting, I mean, things that are non-financial, like supply chains, etc. All of that, tracking things on a blockchain, on a ledger that's a single source of truth that no one owns, so it's the source of truth. It makes all the sense in the world. And it's been surprising that none of that's happened over the last 10
Yeah.
years. And now we're here, and I'm trying to parallel process us doing as many of them as possible along Ethereum because again, the network effects and the technology's here and it's ready and people are finally accepting. So yeah, voting should be on chain, tax payments should be on chain, even spending in some forms should be on chain, and people are working on it. So yeah, I think he will too. I don't think he's going to come back. I don't think he's going to be like Gensler. I think Gensler is a one of one that just hadn't had an agenda, and both the Democrats and Republicans now want good adoption.
Yeah, I'm just thinking aloud. You might have a second evangelizing role, bringing blockchain to governance in New York. Not just bringing blockchain to Wall Street.
Well, they're tied, right? I mean, that's the one thing is the government work. Like we have spoken with the SC Crypto Task Force. They've been super open. We've again, testified in front of Congress. We've been in front of Treasury. We've done way more policy and government stuff that I ever thought I would do. I mean, I thought I was creating a company to onboard institutions, but institutions and government are very tied together because institutions won't do anything unless there's regulatory tailwind and they know that it's de-risked. I always say like the financial sector is not like the tech sector, and that tech sector can move fast, break things, get a slap on the wrist, be like, oh, my ads got hacked, the PII got hacked. It's fine. Again, they get a slap on the wrist and they just go back to it. You can't do that with the financial system. Like if high value assets are stolen and go to some bad party, it's over. So you need security. You need to move very slowly. You need regulatory clarity. You need every single tailwind possible to get a big behemoth like a banker and asset manager to actually change course and then integrate new technology. And part of that is going to government. So I don't think it's either or. Like I would love to try and integrate some sort of blockchain based systems into New York City. That's a dream and it's very complementary to what we're doing already. It's a good idea.
Mm-hmm.
Go back to New York and do
So
that.
yeah. Um, so how do you, you mentioned about talking about policy, making a representation of the government for the Clarity Act. Can you dive a bit more into that sort of what is the outcome of that, and what was your sense of where the government really is? If we keep Trump aside, where's the real sort of government? I mean, where's the government in the U.S. On as well? In a more longer term.
So Trump aside, because that's not a rabbit hole worth going down, but aside from that, we are in the most technologically accepting government, I mean, ever, really. I mean, like, I don't remember the last several administrations being this open to saying there's many new technologies, let's harness them and bring them to the US. Elon Musk has been driving, I mean, even he got involved in a pretty big way, which is inspiring because we need America to be the home for innovation, to be the home for capital markets, to be the home for, yeah, the American dream. You can come, you can build something with all these new technologies, and you get rewarded for innovation, not slapped for innovation, like people in crypto were before. Um, they're open to all of it. I mean, the fact that the stablecoin bill passed so quickly is inspiring. Um, they wanted some sort of Ethereum representation for the Clarity Act, so I got the tap for that. It was also very, very inspiring. But we had to go tell the story of why we need decentralized blockchains and why America needs to be the home for them, and why decentralized blockchains are actually a very positive sum for society. And I get to tell that story, I think, pretty compellingly. And both sides of the aisle again want that. They really, really do want America to be the technological leader. I think
Mm.
we can't we've gotten two ridiculous technologies that are all ripe at the same time: AI and the data center boom and the whole innovation happening with LLM arms race. And it's we're at the tip of the iceberg on the AI scale. So we have to figure out how to integrate that into America and the world. But the government's very open to that. Like, they want America to be the home for that, across AI innovation, also across manufacturing for AI. At the same time, blockchains are now mature and ready and are production grade, and America is very open to that too. So it's it's setting up to be a gigantic technology driven bull market by having both AI integration and blockchain integration deep into the infrastructure of America. And yeah, the government wants it. I think I think a lot will happen very quickly, even though we've been shut down for a little while. I think it'll get done.
Okay. Okay, let's step back into Etherealize and the whole mission. What was your pitch to Vitalik?
Pitch to Vitalik, it part of it came from me. Part of it, actually, most of it came from other OGs in the ETH ecosystem, right? I mean, I'm relatively new.
Mm.
There's people that have been in the ecosystem since day one.
Yeah.
People like Grant Hummer, one of our co-founders, James. I mean, there's people that have deeply made Ethereum their mission, ideologically, professionally. Just they've given everything. So I'm standing on the shoulders of giants. I don't want I owe them a lot of credit. I I was just a guy that came from Wall Street that wasn't an ideologue. I just saw Ethereum as a really good business decision, and I can translate the story fairly well from cypherpunk to, hey, this is a practical, really good use case. So we just complement each other really well. So I think we said that again, we didn't get a huge amount of backing or support. We just got a lot of signal, which is helpful, especially when going into somewhere like the big banks. Like, they want signal. They want to see that Ethereum is being represented institutionally. So that's what I wanted. So that's what we pitched. We're going to go educate everyone, and here's a set of very positive Sun messaging, and it's all quite neutral. I mean, I'm obviously tribal towards Ethereum, but I don't spend time tearing down other ecosystems. I just say, here's the architecture I think works, and here are the holes in other ones, and you guys choose. So I don't know. We take the high road. We have a lot of reputation behind us in terms of, like, I have a lot of, like, really, really storied Wall Street players working with me, and it's that's also a dream every single day. So Vitalik saw that, and he was like, okay, I'll loosely support this a little bit, but again, we are not really tied to the Ethereum Foundation at all. We got some initial grant from them, and then they stepped back as the EF should and let us run with it. And so we raised VC money. We didn't raise we raised from Electric and Paradigm, who are very, very deeply rooted in Ethereum. Like we're building real solutions for real problems that the EF would never do and shouldn't do. EF should be doing all the cutting edge research, like advancing ZK and interop and just making Ethereum faster and cheaper and more scalable. It's been very, very complimentary, but it wasn't that much of a pitch. It was just give us a shot. We're gonna do something good for Ethereum. It's I would like to give back, and hope we've been doing that.
Okay. And how's it going in the more recent past? So now you've got your full team, an expanding team. What's the product roadmap for Etherealize?
Tokenization infrastructure number one, L2 infrastructure number two, and then privacy infrastructure number three. And when you combine all three of those together, you create an environment that's basically a institution can plug and play and tokenize any sort of asset, whether it's something simpler and more homogeneous like a stock, or something that's very, very complex like a weird fixed income instrument. Yeah, we're going pretty big. I keep saying that the opportunity in the window is right now. So I know we have the team and the talent, and the technology's ready, and people like Danny and Zach are, I mean, and Grant are like the most overdrive capable people ever. So we should be tackling multiple markets. We should be trying to generalize frameworks. So anyone that wants to use Ethereum, they can just plug in. And so that's what we're building. I mean, first you have to tokenize assets. Second, you need the privacy for them. And third, ultimately, institutions are going to want their own blockchain ecosystems. A lot will live on layer one, a lot of high value transfers and high value, I mean, Vitalis is high value DeFi, but high value assets will live on layer one. But when you want distribution and cheap fees and to increase margins and to have, to tack on additional fee revenue that institutions all want, they're going to do that on their own layer twos. So we're creating the infrastructure for that. And that's how you I think that's how you bring the ecosystem together. So we're building all of that in parallel, and then trying to get real use cases. So that way institutions can say, I want a blockchain strategy. Here's a blockchain strategy. It's in a box. You just plug into Ethereum. My processes, everything's better. The tech's ready for it. So we have to also productize it.
Okay. So is it going to be entirely an infra and B2B play?
I don't think crypto is B2B by definition. It's the thing we talked about before is, yes, right now my best network and our I mean amazing BD and Wall Street advisors that are, again, quite legendary, their networks are across Wall Street. So right now it's B2B because there's a lot of capital and a lot of unlocks that can happen by bringing every asset manager and bank on chain. But once you do that, everyone wants distribution, and so that's distribution's B2C. So I mean, like everyone, because what does distribution mean? It gets you more AUM, it gets you more access, it gets you more liquidity, gets you more customers. Businesses will pay less in terms of margins than consumers. That's why banks make so much money off of consumers. That's not going to change. So yeah, the focus right now is B2B, but because it's software, the same thing should be translatable to B2C and retail as the next phase.
Okay. So if I were to kind of draw an analogy, and of course we've got the privacy element, which is something which is core to your design. So how would Etherealize and the infra that you're building be different from something like, let's say, Ondo?
Ondo's great. Ondo's actually brought a lot of tokenization and raised a lot of awareness, and they're also working on Wall Street 2.0. And again, I'm pretty positive about people working on things like this. Ondo has also tokenized a lot of stocks on Ethereum itself. So it's just one data point to note that, like, the gravity black hole of Ethereum's liquidity and security, it's all roads lead there. I always say all roads lead back to Ethereum, but there's a lot of assets out there. There's, I think, trillions, if not quadrillions of assets out there. So everyone can tackle different slices. Ondo right now is going after tokenized stocks. That's amazing, and I think the whole stock market needs to be tokenized quickly. And Nasdaq's looking to plug in tokenized stocks into their offering. All exchanges are. So they're working on that. we're working on different asset classes. So I just think there's such a wide range of assets that require kind of custom tokenization before you can general purpose everything. That it's again it's positive sum. I don't view them as competing. I actually view them as elevating the narrative that everything needs to be tokenized.
Mm-hmm. So by sort of if you were to look forward a 5 to 10 year horizon, what's your take? Do you think a majority of financial assets would be tokenized beyond chain, or do you think there will be I mean, if and folks like us who are in the space, we really believe that it's not a question of if, it's just a question of when. But when that happens, will there be just one system then, and will all legacy systems just see their sunset?
Well, let's dive into legacy systems because I would say legacy systems it's just a lack of systems. Like there's no standardization. There's not really that much to quote unquote disrupt because the financial system runs on faxes and Excel files. So like if that's the system, then that should have been sunset a long time ago. Uh, Anything can plug into a blockchain, right? Ethereum's like a giant API with a lot of really, really cool functionality that anyone can build on and plug into. So it's almost like saying if we have one internet that everyone plugs into for email and information and file storage and everything, is that the right architecture? And it obviously was the right architecture. We didn't have multiple internets. It's one internet, but you still have max innovation. Companies build on top of the internet. Companies have their own silos within the internet. Companies make a lot of money by deploying on the internet. So it's kind of the same thing. I do think that everything will be tokenized. I don't think this experiment works to its full potential unless everything is tokenized. I also think everything will get more and more standardization. We're trying to create different standards across different tokenized assets because then you have fungibility. Then you get all this magic of being able to do structured finance and everything with software. And I think that it's all going to be in the Ethereum ecosystem. Again, not like I'm vocal about it, but I don't think we'll have multi-chain because then you just break security.
Mm.
But we will have multi rollups. I think we could have thousands of rollups, and you can have company specific rollups. So if you look at Ethereum as the internet, you can look at rollups almost as websites where people can actually charge whatever fees they want. They can have more profit margins. So it kind of mirrors the internet today. You have one internet, you have tens of thousands or hundreds of thousands of websites that are all amazing business models for the people that deploy websites. And yeah, we'll have Ethereum. We'll have a lot of different rollups, and all the assets will be in this ecosystem. And I think that's that roadmap, which Ethereum chose very, very early and was criticized for a long time, is proving to be the only way to scale and maintain security and maintain the resilience and uptime. I mean, you can crank up a layer one's performance only to a certain degree before you just turn into Nasdaq. In which case, then again, what are we doing here? So,
Mm-hmm. Yeah, no, absolutely, and it must have been a very dramatic transition for you from spending long years in TradFi, almost getting frustrated seeing it inside out, how archaic systems are, and the lack of it in many ways, and we've seen how those have actually impacted markets and investors as such. And there's the incumbency has so much of vested interests, obviously, that and that's why that was my opening question when we started out. Do institutions really want to come on chain, or are they being forced to come on chain? So, what was your talk to me a little bit about sort of your whole background, working through the years. When did this sort of change happen in your mind to really look at something different, which is sort of on chain and more specifically in DeFi? So let's dig into that.
Yeah, I want to emphasize that the time on Wall Street was incredible. Like I love the culture there. I love the work ethic. in people start to say more and more that like especially next generations of kids, people don't want to work, people don't have the discipline, people aren't used to saying, oh, let's get up at 4:35 a.m., let's go come back home at 10 p.m. It's for some reason that's gone. That was every day for me on Wall Street, and I loved every moment of it. Like I part of the reason why I want to go after institutions in Wall Street for blockchains because I love the people. I get some of the most motivating, some of the most just driven people ever, and in one of the most interesting sectors. So again, that's the only frustrating part was you have such an advanced capital market system, such advanced financial engineering, and no
Mm.
technology to back it up, and it just didn't make any sense. Like that was just more of a it was just very very surprising.
Yeah.
If we rewind before, I mean, high school, I
And
was
fintech just ended up becoming a wrapper.
yeah, exactly. And that's what tokenization cannot be, by the way. Tokenization cannot just become a wrapper over the existing system. Otherwise, again, we're not improving any actual processes. But no, if we back up, like I middle school, high school, I was all sciences, all engineering. I went to an MIT camp that ironically my roommate was Keone from Monad, so some pretty cool crypto connectivity there. And then even at Yale, I was engineering for most of the time until in 2009 I interned at Morgan Stanley on their junk bond at the high yield bond desk. And it was 2009. It was the rebirth of finance after the financial crisis. And I was like, this is the coolest place ever. So I dropped all the engineering, all the technology side, and just went to trade bonds. And so that's the thing. I'm a technologist at heart, and I was hoping that the financial system, especially things like bonds, would upgrade, and they didn't over 11 years. And in 2020, I mean, people end up doing lifetimes on Wall Street, and they do very, very well. But it's not as there was no technological growth or upside. So I was like, I took a risk. I said, let's just leave all of this. Moved to Austin. That's why I'm in Austin right now. I moved home to Austin. Said, let's just reset. And then the second I got here, I met people at the Ethereum Foundation working on security under this guy Danny Ryan, who was a legend on this thing called the Merge. And I was like, let me learn about this thing because now I'm unencumbered. I don't have any biases from Wall Street. I don't have any incumbent bias. Let me actually just see what Ethereum is, and it just so quickly clicked that this is the answer. It's the obvious answer to take all the legacy assets and operations from Wall Street and just put them on a public blockchain, and then magic will happen. Um, it just became obvious. So it just became a mission. And so I've been working on that. But I'm very, very grateful and thankful I get to come back to New York and work with all the people that I worked with over 11 years. And at the end of the day, I hope that public blockchains and Wall Street merge, and Ethereum is the backbone for the financial system and much, much beyond that. But yeah, I love my time there. I love the people there. And I'm hoping we can drive real innovation, real value so I can keep working with all those people and institutions.
Right? And uh, we touched upon sort of the distribution
Yeah.
bit, uh, and access is important. So going ahead, do you think that on your roadmap you will be looking at um, actually bringing in some form of ease in user access to tokenized structured products, for example, be it DeFi abstraction or some other aspects, which then kind of be built into the sort of infrastructure that you're building, so that so institutions who tokenize assets not only look at the sort of the infrastructure part of it, but actually are able to provide more abstracted, easy access to complex DeFi structured products.
Yeah, you absolutely nailed it. Like that's you articulate it kind of perfectly. If that's exactly what the end game is tokenization should become a commoditized thing where you can take something infinitely complex or infinitely simple and turn it into something that people across the world can access with all the complying with all the regulatory bells and whistles and the jurisdictional needs. But I mean, growing up on Wall Street, I did my research side in Excel. So you look at a company, you model it in Excel, you get the whole, you look at all the cash flows and you say this is what the company should be worth, whether it's a stock or a bond or everything. It all flows from Excel. I think the next generation of financial analysts and research analysts are going to use Solidity instead of Excel. And so they'll say, let's program all the different parts of an asset or a company into a token. And so you just go directly to tokenization. And yeah, that's part of what we're building is token. Everything should be tokenized. So let's build the tools to make that happen. And also, a lot of this will have to be some parts of the data you put into a token structure need to be private. Some need to be public. So that's why privacy also becomes a necessity. But that's why it all flows together quite nicely. That's exactly what we're doing. Is trying to commoditize tokenization for everything, and also just make it something that all of Wall Street can access pretty trivially, because then the magic happens from DeFi and the application layer, and that'll be fun when we get to the application layer of our roadmap.
Right. No, absolutely. And all this sort of happening on Ethereum and core asset of ETH. I think we should close on Hash with your views on ETH, and where do you see it next year and in 5 years' time?
I think ETH's the most interesting asset that I've ever seen. I mean, we didn't talk about the part of my background where while I was on Wall Street, I always wanted to start companies. So I started a real estate company as a side thing on Wall Street. Me and one partner bought 50 rental homes. We flipped 200 land parcels all around the country. Like, real estate is it's a near and dear to me thing to me, and I think a lot of the operations for real estate belong on blockchain, and that's a whole different topic. But coming back to it, I owned real estate. I owned cash. Like, back on Wall Street, those are semi-interesting. I think ETH is orders of magnitudes more interesting as an asset in terms of upside and utility. And so if we have this thesis that the global economy and the financial economy will run on Ethereum, there's one reserve asset across all of the L1 and all L2s that is not censorable, that's self-sovereign, that's actually a neutral store of value, and that's ETH. And I just think that it's mispriced by orders of magnitude. So if we take, because people like to say that ETH and other smart contract platforms should be valued on revenue, and they say for some reason Bitcoin shouldn't be valued on revenue. I think that's a bad double standard. But if we take ETH itself and we take Bitcoin itself and put them side by side, which we did in our ETH digital oil report, ETH has lower inflation. ETH has a yield. Bitcoin has a supply cap, but I don't think it's a real supply cap. It's going to have to change at some point. ETH has an issuance cap of 1.5%. So ETH will never grow. The ETH supply will never grow more than 1.5%. If you lay all these attributes of store of value, ETH has proof of stake, where everything is more elegant. Bitcoin needs a bunch of miners and electricity, which ends up being centralized. Put all that together, I just think ETH's such a superior asset, just on an asset level, as a store of value, than even Bitcoin. That, yeah, I mean, I'm waiting and driving for the flippening. I'm driving for ETH's market cap to exceed Bitcoin. I'm driving for it to be a multi-trillion-dollar asset. And the more adoption we see, and the more visibility is around the Ethereum ecosystem, the more eyes will come to ETH. So yeah, as part of this whole Ethereum adoption thing, I'm pretty passionate about ETH the asset, and I think it should be a multi-trillion-dollar asset. I thought we'd get to 10K this year. We still could, but it's a matter, like you said, it's a matter of when, not if, that we become 10K, then multi-trillion, and it just becomes a global reserve asset. And I'm excited for ETH to continue to elevate to become the store of value across the entire blockchain ecosystem.
Vivek, it's been great having you on Hash, and all the very best in bringing Wall Street onto Ethereum and beyond as well.
Thank you so much. It was awesome chatting with you.